Let's chat currencies now, where the rupee has slipped in trade today, ended the day at 62.43, nearly 0.25% of a decline coming in on for the currency on the back of a choppy session on Dalal Street. Let's also get on board then Mr. Manoj Rane. He's MD Head, Fixed Income and Treasury, India, BNP Paribas, and he joins us for a detailed talk on the same. Manoj, hi, welcome. How do you look at the currency? Because we saw nearly 2-week highs of an opening and then we've ended in the negative.
I think, now even a 0.25% price movement, as you just mentioned, is classified as a depreciation. But having said that, Manisha, I think we must remember that the Indian rupee has been far more stable and in fact possibly well behaved than other emerging market currencies over the last 8 to 10 trading sessions. The reason is quite evident for all to see. Once the tapering announcement was made again, everyone expected all currencies to be under pressure, but the currency has behaved itself, I think, primarily gaining from the fact that the current account deficit is been really positive for the currency, largely helped along by the curbs on the gold. Also, the other one or two very positive factors have been, of course, the FII investments. Equity side has remained positive. We did see a day or two of outflows, but nothing which was like a pandemic or something, or you saw a large amount of continuous outflows. On the debt side, the amount invested in debt itself is now significantly less. It's about 22.5 billion against 39 billion, which it was in July last year. So, that itself gives some semblance of comfort, because there is only a point to which you will see debt investors go out. So I think overall the currency is in a range as of now. It did test 63, it weakened over 63 for a bit, but then came off quite strongly, and as you yourself observed, I think today itself was a high over a few, couple of weeks maybe or more, and it of course could not hold on to that level. So I would think a 15 paisa weakness is not much to write home about, and overall I'm convinced it's range trading for the time being.
Your point is well taken, Manoj, but I just want to bring your attention to some other points. The food inflation still continues to be on the higher side. We are looking at political noises just going higher, and also if you look at the crude oil prices, they are back around $100 a barrel yet again. So do you think these 3 or 4 factors actually could put pressure?
I think from a currency point of view, I don't really think inflation is going to be that much of an issue, because actually, if you notice, whenever there have been rate hikes, following, of course, negativity on inflation, you've seen the currency appreciate. So the market still believes, and global investors do, that higher rates in India are broadly good for the currency, as is classical economic theory. Having said that, the second point that you mentioned is more important. Oil, of course, but you must remember that much of the current account deficit, I mean, a large part of it, or more than actually what it is contributed by oil. What the positives we've seen over the last 2 or 3 months, of course, is that exports have grown more, imports haven't grown as much. So that has again contributed a favorable, headwind, so to speak, or tailwind, so to speak, for the currency. So I do not really think that unless there is something precipitate or likely to happen on the oil front, which is not expected, I do think the currency will not be unduly affected by these couple of factors you mentioned.
Manoj, then what is your sense ahead of the vote on account, because that is the big event that's coming in for the currency to make some direction?
There too, I think market is actually thinking months ahead, if not weeks ahead. Market is more focused, and particularly global investors are very focused on what will happen once the final elections take place. People are quite bullish that you might see a decisive majority for the BJP, which of course I think polls don't seem to indicate, but market is trying to actually start forecasting that, which is considered as any decisive majority would be considered as positive for the currency. I do not really think the vote on account is going to have too much of impact. I do think that it will tend to be more, managing the gaps between the pluses and minuses rather than anything decisive happening in the vote on account.
Fair point. Vijay, getting you in the conversation with those kind of fundamentals, and as Manoj is rightly pointing out, all the kind of news that we've seen in the markets, the currency really hasn't reacted too big.
Absolutely, Manisha. Today also we saw a very lackluster equity market, so that's not really providing any triggers to the momentum or day traders in the currency markets. But what is noteworthy here is that in spite of the semblance of stability at the open, the rupee has lost ground on an intraday basis, which fortifies my hypothesis that the scope of appreciation for the rupee is now fairly limited. And in spite of the hope building around the vote on account, which will obviously reflect positive data points, I think the rupee is unlikely to go beyond the 6150 levels on the appreciation side. And on the flip side, my view remains constant that 63.25 to maybe 63.40 is a level which is very critical for the dollar traders to watch out for. If the US dollar was to appreciate beyond 63.25 or 63.40, I think the dollar can appreciate fairly rapidly to 64 or 64.5 levels, and barely in a couple of trading sessions, because a short squeeze is likely to occur above 63.40. The bears who've created pressure points on the dollar appreciation will be forced to reconsider their decisions and may even run for cover. So I think I would wait for buy opportunities on the US dollar on declines.
Okay, so that's the fundamentals and the technical aspect of the Indian currency going forward. With that, Manoj and Vijay, thank you so much for charting it out for us. And that's all that we have time on Hot Commodities.